What's up, everybody? Welcome to another edition of Dave's Daily Dives. Here with you as always, I am, well, Dave. Today, we're going to take a look at a couple of the major market averages, see what's been happening like we always do. I'm going to check in with the VIX, take a look at the dollar-yen because there were some key values there we were talking about yesterday. And then, I'm not going to leave you hanging, I've got 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs. So if you're a breakout trader, definitely want to check that out. So first, why don't we take a look at the S&P 500, and similar story. Got the fibs drawn here, have a series of lower highs that the market put in and lower lows. Then we broke the top of that trend line and have since kind of been chopping sideways for the most part. Is to be expected during earnings season that you're going to get a little bit of back and forth happening, so that's not too bad there. And I guess it's good that we're kind of bubbling up right under these highs, because that's sort of the same thing that happened December, January, sort of right under the highs, and then finally you get some sort of catalyst that propels the market higher. So we did get a cut down budget deal through the House today, and we'll see what happens with the rest of that. So I think that's what the market's kind of digesting here. That's probably no more evident than in the small caps, because this is the index that's going to be the most sensitive to domestic policies. And here, a similar scenario. We can draw our fibs from the low to that previous high. Market came down, beat that high, came down, retested again, beat that high by a little bit, and then now we're starting to flounder a little bit. We did break on through this trend line across the top, so that was definitely a benefit. But again, we're kind of stalling out, just kind of tick up above the all-time highs, and then now coming back down. Now, I do want to make the point that this isn't exactly like a huge, sharp selling pressuring us to the downside, pushing us down right now. Just sort of a lack of conviction by the bears. And like I said, the Russell, you got to think domestically inclined. These are going to have the most sensitivity to any sort of domestic policy regarding spending bills, regarding tax reform, anything like that. So I think what you had was a run-up in the hopes. Well, I mean, obviously we did, right? We had the run-up early on right after the election. But really, you know, since then, it's been chop city for the Russell for the most part, okay? Now, something else I wanted to point out, and that was, I think it's TYX, I want to say. This is the 30-year or the long bond, the long 30-year rates. And rates, huge spike, just like the Russell went up. Rates went up following the election, and then we've since kind of been chopping a little bit, but have come down considerably since the Fed raised rates. Go figure. So I've been scratching my head trying to figure out why on earth is this actually happening. Shed some light on it today where I talked to a few of my colleagues, and somebody brought up the fact that just, you know, look, we're the only game in, we are the highest yielding game in town when it comes to developed markets, developed countries, and their bond yields. So relatively attractive to money that way. So this is not so much a risk off per se. This is just more the overall effect of having more water in the bathtub, so to speak. That money's got to go somewhere, so it ends up finding its way here into our bond market, pushing these yields down. And what hammers home that this is not a risk off trade, two things. First, the volatility index out of the SIBO, the VIX, seeing that move down here at 1068 rather today, and have been down in the doldrums since that spike into mid-April, but they faded that pretty quick too, and volatility hasn't done anything, so there hasn't been risk, any risk off here, right? And then the other part, and we cover it all the time, is this dollar-yen chart. And since bottoming out here, dollar-yen has been appreciating. This is risk on, my friends, is what this is. And now, again, another trend line across the tops. that may be breaking today. So that puts not just the highs of the 118s. No, you'd have to draw a fib retracement, or fib extension rather. So remember, we use our negative lines here. So negative 38.2, I think, would be that next target. That puts you all the way up at 125 on dollar yen. So lots of risk off. And let me tell you, that would be terrible for gold. Gold would definitely take a punch on that, okay? So key levels to look for. We've already broken it here on dollar yen. So now 114.57 is what you got to look for. The next, the 118.70s. So this is risk on behavior. That's great because hopefully that correlates on through to the S&P 500 and the Russell. They keep pushing higher, and earnings season keeps on sparkling as it has so far. Now I got 5 Zacks Rank #1 strong buy stocks for you that are breaking out to new highs. The first, Allison Transmission. I'll give you 2 guesses to figure out what they do over at Allison Transmission. You're probably right. Definitely in the auto biz. And really here you have a lot of choppy activity taking place from the basically first quarter of 2016 all the way on through to third quarter. And then the rally along with pretty much everybody else on earth rallying up. But here's the good part is that after a shallow retracement, we've broken up higher to new highs. This pattern should look very familiar to you. Lower highs getting put in along with higher lows, or lower lows rather, sorry. And get my drawings right. There you go. And the net effect is a breakout, and then now it's pushing up to the upside with a lot of momentum there. Okay, so really good. I think you can chase this breakout a little bit. Just place your stop underneath this gap here, maybe in the 37s. Give yourself a little bit of room, and the stock could do very well for us. Again, that's Zacks Rank #1 strong buy, Allison Transmission. Now we got Baxter Labs, or Baxter, ticker BAX. And again, lows in December, and then it's just been pretty much straight up from there. This is really nice because it hasn't had huge moves to the upside with huge retracements to the downside. This is just something steady along the way, and what you'll see a lot of when you're using the Zacks Rank, seeing Zacks Rank #1 strong buy stocks, is you continually have earnings estimate revisions to the upside, which fuel moves like this and push the stocks higher. So this is a great little chart to look at here. You know, a bunch of the volume came out here at 48s. You could wait for a retracement back to the 50-day. That's happened in the past. But here, and I want to pull up the money flow for us. Money flows have been positive since crossing over the zero line in January. Stuck that way. So this has been a slow accumulation over time. Positive trend. I think this one you can just kind of jump on and ride it off into the sunset. The next one I got is CAI International. That's ticker CAI. So this is transportation, finance, and logistics here in the U.S. So container leasing, rail leasing, that kind of thing. This is a little different story. This has a tendency to move sharply and then kind of consolidate. Move sharply and then consolidate. So the way to play these sort of stocks is you want to wait to the bottom end of that consolidation range. Wait for it to get a little bit oversold. You can use the commodity channel index in order to do that. And then you just go ahead and buy. So here with the commodity channel index going from 300 coming on down to 75, you want to wait for that either to come back down to the zero line again, I think would probably be the best pattern, and then have it cross back over again. That's the same thing that happened here. So it gets down oversold below -100 before it crosses over again. Money flows are still positive here, so that's confirming the bullish trend. So things are looking all right here on CAI International ticker. Go figure. CAI. You may have heard of this company. I'm not sure. The company formerly known as Google. Alphabet is the holding company now, And they are a Zacks Rank #1 strong buy, coming off a great earnings report where they gapped up and then have been rallying on through that. A little bit of a softening in the money flow here, though, but it's up here at new highs, so it's kind of hard to argue with that as Google has pushed on through. Lots of momentum behind this name, but this big gap up here, they do say that gaps get filled. So for the more patient investors, you might want to wait for it to come down here. But with the stock up at $9.48, it's awful tempting to try and get that $1,000 mark. That's Alphabet, ticker GOOGL. And you can also do the regular one, the other one, so to speak. So just different share classes. One has voting rights, one does not. So GOOGL and GOOG, right? Those are the two. And then with tax season behind us, H&R Block, ticker HRB. So these guys, I like going out and giving you some perspective, going all the way out to 2016 here, because this is a recent high that we're butting up against. The stock hasn't been this high since April 2016, but this is a stock that was up in the 30s, mid-30s in February of 2016. So I like this nice little pattern where it rallies up, runs out of gas a little bit, finds support at the 50-day, and now starts to creep back on upwards again. You've got positive money flow, commodity channel index a little overbought, but this could be a breakout here. I think I would play the breakout, so I'm more comfortable buying once it does break out on the other side of 25. So there you got it. 5 Zacks Rank #1 strong buys on Dave's Daily Dive. Don't forget, you can follow me at Twitter at Bartosiastics, where I let the world know all sorts of fantastic stuff. So I will see you all tomorrow for Dave's Daily Dive. Have a good one.